A new day and a fresh new high for DMart stock today after delivering a stellar set of numbers on Saturday. The stock again made a fresh 52-week high intraday, breaching that 3,137 mark during the session. However, it did settle sort of flattish by the time the markets shut, but definitely it did saw a very wild upswing as far as the intraday moves are concerned. Let me talk to you about the numbers. Now, consolidated revenue came in at 7,542 crore rupees, a good 11% expansion year on year. Bottom line was up more than 16% YOY at 447 crores. In fact, it was the margins performance which seems to have impressed and enthused the market mood quite significantly. It came in higher than the estimates. The margins for Q3 of FY21 came in at 9.1% versus 8.8% in the same quarter last year. So a decent 30 basis points expansion seen as far as Q3 of this fiscal is concerned. What was the management commentary like? Well, the MD and CEO of Avenue Supermarts, Neville Noronha, said that the quarter has seen further improvement in the business, financial metrics, their overall sales, as well as sales mix is trending very close to the usual times, except for specific customer consumption changes that have happened in the post-COVID era. They also said apparel, laundry, footwear, travel, and similar, out-of-home usage items are taking some more time to recover. That is a slightly cautious comment coming in from the management. However, talking about the demand, he says that the Agile OPEX management and good surge in the festive season shopping allowed them to deliver a significantly better quarter than the last two quarters. So if you see, there has been a consistent sequential improvement a quarter on quarter for DMart's performance. December month was not as solid or as strong as the months of October and November. There was restricted store operations in some cities. After Diwali, there were some intermittent lockdowns, night curfews happening, weekend closures were also taking place in certain markets, which led to significantly larger declines in those stores versus the same period last year. Management continues to face some inconsistency as far as the supplies are also concerned from the non-FMCG sector and also a headwind in the form of raw material prices going up. The management added that the availability in certain categories is likely to worsen even further before it could actually start seeing some recovery and improvement. On the back of which they could see some impact on sales mix and the margins over the near term. But the long-term story largely seems intact. As far as e-commerce operations are concerned, they continue to scale up DMart Ready. It soft-launched DMart Ready in select pin codes of Ahmedabad, Bangalore and Hyderabad. And some of its stores as well, it has leased some space to Avenue e-commerce to commence the e-commerce operations in those cities. Management says the post-COVID environment is creating opportunity for DMart Ready in more cities, but going forward, their approach will be of small trials, reviews and controlled acceleration as far as DMart Ready goes. Brokerage reactions have been quite positive. If you look at Credit Suisse, they say that there was a strong recovery in Q3. However, the commentary indicates moderation. So that is something that seems to have irked them. Like I said, they said they could see some near-term challenges for sales mix as well as margins. Management commentary cautious as growth slipped. They have increased FY21 to 23 earnings estimate by 11 to 12% despite the cautiousness. Goldman Sachs maintains a buy. Target that they have given is 3,142. Margin speed expansion for e-commerce, but slower exit rate. December performance was not as strong as October, November. That is something that they also seem to have flagged off and seem a tad bit concerned about. Stronger performance in October and November reflects it remains the preferred shopping destination for consumers. EBITDA margin at 9.3% higher because of better gross margin. So largely, as far as the market reaction is concerned, it seems to be a mixed bag, largely optimistic. But yes, given that there was a sense of cautiousness in the management commentary as well, that also seems to reflect in the brokerage reaction and the brokerage notes that came out this morning as well. So yeah, largely the stock definitely seemed to have shrugged off any of the cautiousness in the commentary. It, while it ended flat, but it did see that intraday high of 3,137. So all eyes on DMart and the growth trajectory, not only